Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us is University of Missouri livestock economist Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
More trade conversations, but to kick things off, let's recap what happened this week in the markets.
Yeah, if we start on the hog side, we look at cash hogs this week. We continue a little bit of that trend down. Cash hogs down a little more than $1.50 this week. Although when you look at the future side, that current lean hog futures contract gained about $4 this week. A lot of strength here at the end of the week on that front. So some good news, and perhaps we get some higher cash prices as we get into early next week. On the pork side of the equation, the pork cutout value down another $3.30 this week. It now sets 12% lower than where it did a year ago at this time. The Wednesday pork cutout closed at $65.86. That's the lowest level we've seen since April of 2015. So been a different story on the pork side. That weakness this week in the pork cutout value really came from lower bellies that now sit 31% below where they did a year ago at this time. So we need some stronger pork values if we want to start working on those hog prices, I think, as we move forward. If we switch gears and look at the cattle side, fed cattle, cash-fed cattle closed $1 higher on the week. If we look at the feeder cattle side, we got steady to 8 higher on feeder cattle. I think some of the weakness in corn futures helped us on that front. On the future side, live cattle were flat this week, while feeder cattle gained $3. Again, I think lower corn prices helped on that as well. The choice beef value closed down $3.88 this week. They now rest only 2% above where they were a year ago at this time. Lower ribs and loins really led the way on that choice beef value.
Scott, as we take a look at some of the movement in the markets, how much is this trade rhetoric and some of the uncertainties about what's going on there coming back and impacting what markets are already pretty volatile?
Yeah, so I think markets certainly are trying to pay attention. What's the very newest information that's out there, and we trade on that right away. We shouldn't expect this volatility to go away anytime soon, given all of the uncertainty that we have on the trade front from a number of arenas. But again, we tend to sometimes see these markets overreact at times to the current news of the day, and I just don't expect that to really go away. We need to make sure from the producer standpoint that we take advantage of the opportunities when they exist for us to reduce risk, I think.
Let's talk a little bit about the latest WASDE report that came out this week. Any surprises in some of those numbers and some of the numbers released from USDA?
Yeah, so we did get some changes this month out of what we saw out of that WASDE report on the livestock side. I look at fed steer prices that this month relative to last month, they lowered that midpoint by $3 a hundred. On hog prices, same thing, lowered that midpoint by about $2.50. It just reminds me that, as we see a little bit of weakness in these cash markets, we've seen USDA make that adjustment. It's interesting, at the same time we see the adjustment of lower cattle and hog prices. They also lowered the per capita availability of beef, pork, and chicken this month by nearly a pound. So you put all that together, and you have to say the only way you get to that outcome is that they weakened the demand situation that they see in 2018 in the livestock complex. Let's hope that's not the beginning of what could continue to unfold as we go through 2018, but certainly can agree with them that it has changed as we've looked over the last month with both lower cash prices for cattle and hogs.
Last month, surprisingly, we had a pretty strong consumer confidence report. The report for April came out, and there's a little bit of a change from March.
Yeah, so we certainly want to remind ourselves that it has gotten weaker. When we look at the April 2017 consumer confidence numbers, that overall index fell 3.6% relative to where we were in March. And again, you pointed out March was a pretty strong month. When you look at the components of that, the current economic conditions portion of that consumer confidence index was down 5.1%. While when we look at the expectations, they were also down month over month about 2.3%. I think you're starting to already see out of those data that's available, some consumers worried about what the effects of trade, some of these trade issues are to the overall economy. And I think that's part of the weakness that we're seeing in that overall consumer confidence index that we have out here for April.
And it's been an interesting conversation about trade. We talk about uncertainties with China. We talk about the NAFTA. And now there's talk about President Trump talked this week about possibly re-entering TPP negotiations. How does that, for the average consumer who may not have their hands in and maybe their nose in the books when it comes to these trade deals, how does that rhetoric impact how they feel about what's going on?
Yeah, I think in many cases, you pick up the news and you just immediately are barraged by all of these different issues that come up. And as much as we talk about it in agriculture, if you think about that average consumer, all of a sudden you hear about steel prices that are much higher. I've seen the news where some are saying I've already raised steel prices by 25%, and I think consumers realize that then prices for them for the goods they buy could also be going higher as well. Trying to sort all that out, I think it again just leaves that uncertainty. And if you sit there as a consumer and you're not as confident about where things go, lo and behold, that consumer confidence index starts to take that move lower. It's only a point in time kind of estimate, and what consumers actually do, I think, depends a lot about what we get out of some of this trade rhetoric as we move forward, and they would recover very quickly if we say, hey, all of a sudden we got a NAFTA agreement that's better for us, or we're going to rejoin TPP. I think all those things could move the pendulum in the other direction fairly quickly as well.
Does the lack of uncertainty maybe add more concern or add to maybe a more concerned consumer, because so much of this is up in the air? They don't know how to budget or to plan or where things are going price-wise?
Yeah, I think anytime you add uncertainty, you kind of make them pull their horns in a little bit, if you will, and maybe all else equal, spend a little less than they would have otherwise. And I think, you can see perhaps some of that's going on. I'm not certain the data that we have available to us yet suggests any real slowdown in the domestic economy. But the longer this all stays with us in terms of uncertainty, the more we might see some information that would suggest that we are making those kinds of adjustments.
It'll definitely continue to be a point of conversation for us and for those in the ag industry, especially as we get further into 2018. We think about planting and more hogs coming through markets and those types of numbers as well.
Yeah, absolutely. And I like to remind folks all the time. So imposing a tariff, the effects of that is certainly, and let's take pork, for example, imposing tariffs in China on pork. We know that has some effects, but we also get some market trade-offs as other folks might trade with us. But whether we institute, let's say, a tariff on soybeans, that's a very binary outcome, 0 or 1 right now. And so the uncertainty is we don't know if we do it or don't do it. And that's a lot different than, and I think very difficult for markets to understand the effects of. And I think that's why we're going to continue to get to talk about this for a while, because I have a hunch the uncertainty of implementation will continue to get us in this. One day we think we will, and it's the outcome's the binary 1, and the next day we're not going to have these tariffs, and the binary outcome is 0. That'll make those markets move really quickly.
Everybody loves the roller coaster ride, right?
Absolutely. We like the roller coaster ride at the top, not the bottom.
Very much so. Scott, let's talk a little bit retail meat prices. What are some changes and some movement that we've seen on that side of things?
Yeah, so when we look at where we're at in terms of reports we got out for March retail meat prices, I'll start by number one. If you look at the difference between beef and pork here for a minute, sirloin steak prices that we get from BLS in terms of survey work. So we ended up at $8.34 for March of this year in terms of that sirloin steak price. That's nearly 50 cents higher than where we were a year ago at this time. I think it reflects what's in some ways been a better cattle market for us, because demand or retail prices have been stronger than what we thought. Yet if you go to the pork side of the equation, that bacon price for March of this year came in at $5.53. That's nearly 25 cents below where we were a year ago at this time. I think that has a lot to do also with where cattle and hog prices have been. When you look at that overall choice beef price for March, it came in at $5.87 this month. Yet you look at the pork side, pork prices at $3.75. In many ways, I just keep reminding us we haven't seen the same slide in those retail prices this year from January to March, let's say, as we've seen in cash prices. Both in the case of choice beef, we're actually higher by about 13 cents since the start of the year, and we've been fairly flat on pork prices. So maybe there's a little bit of silver lining there in terms of where retail prices have been.
We haven't got to talk a lot of positive news when it comes to trade. There's been a lot of discussion about Argentina this week and what looks to be like some fairly decent news for both U.S. beef and pork producers.
Yeah, so when we look at what's been going on in Argentina, we can start on the pork side of the equation. We did get last August the announcement that Argentina was going to open up to U.S. pork imports, and that's the first time in a quarter of a century. So it's been a long time since we can talk about U.S. pork going into Argentina. I think we have an opportunity for more products to move millions of dollars potentially in terms of U.S. pork imports, which, again, as we talk about all this trade uncertainty, finding new markets is always one way to reduce volatility, because all of a sudden you got more market participants that maybe can help offset some of the negatives that you see. I think when you look at our Argentine market, it's good for us in terms of what could be coming for hams as well as pork trimming. So we'll certainly applaud a positive news on the trade side. And we've now gotten through all those technical requirements, and I think we can actually talk about products beginning to move to Argentina. We also got recently some news in terms of cattle inventory out of Argentina. The dry weather that's plagued South America, and we talk about it a lot from the crop side, has also hurt cattle inventories. I think that's a positive as well. We don't see a lot of trade in terms of that Argentine cattle side, but all in all, a little tighter cattle supply situation probably helps us when we're actually growing inventory here in the U.S. So we'll take that news of lower cattle inventories in Argentina as a positive from a U.S. perspective.
Scott, one other quick question. You know, we've talked a little bit about the drought situation here. How are things looking, and how is that shaping up for cattle producers here in the U.S.?
Yeah, so I frankly don't think we've seen much change, and I say not much change. It's one we have to watch, because there's and I always say growing red area, if you will, the very worst drought conditions setting out there still in Oklahoma, Texas, et cetera. Tell me where that expands as we move forward. I sometimes tell my Missouri producers this might be good news for us. If we remember back in 2011, I would always say we got a chance to empty hay barns that we didn't have a chance to empty for a long time, and maybe got rid of some poor quality hay out of Missouri as we shipped it into Oklahoma and Texas. That same thing may happen again here as we go through 2018. But for me, that's one of the big question marks that we have left. A drought like 2012 here again in 2018 can certainly change the outlook for cattle markets, especially as we look ahead into 2019. So we don't want to forget that's still laying out there and could potentially dwarf a lot of the other issues we've been talking about.
Scott, as we wrap things up this week, taking a look at next week, reports that we're watching. I know there's a big one next Friday. And what are we looking for in that cattle on feed report?
Yeah, so cattle on feed on Friday, let's hope we get placements down for a change as we look ahead to that report next Friday. We've certainly been talking about placement numbers that have been above year ago levels for a long time. I anticipate we might actually get some better news in terms of being down. We'll also get livestock slaughter next week, so just another indication for where our weight's been. We know what we've been doing number-wise in terms of slaughter, getting a little better indication of what cattle and hog weights in particular that have been running above year ago levels, what those look like, and how much they multiply the overall growth in production. I think is important as we get slaughter next Thursday.
Scott, good to see you. We'll talk next Friday, and it will be plenty for us to talk about then as well.
Absolutely. Have a good weekend.
You too. For our weekly livestock market update, to have it delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great day. I'm Megan Grebner for Brownfield.